Good afternoon from OANDA Asia. This is the weekly market insights. I'm Jeff Halley. This week's been a bit of a funny one. We've seen stock markets come under pressure in the last evening or so. And I think part of this is because we've run out of good news. All the good news is priced into markets. Hence, when Netflix last night came out and said they'd added, I think, 4 million subscribers, their shares got sold because they've front-loaded so many new subscribers into 2020 that people are going to go, what next for Netflix going forward? And I think that's being reflected across the markets in general. We're looking for some new drivers here. That melee's spread to Asia today. We've seen particularly the Nikkei 225 come under pressure today, down over 2%. And that is because also they are bringing in a state of emergency in Tokyo in a week's time, although I have no idea why Tokyo needs a week's notice that a state of emergency will commence, but this is Japan. We are pretty thin on data as well this week, and that makes these markets very flighty, and markets tend to move around on intraday sentiment flows, and that can make quite choppy trading. So it's important not to get sucked into the noise, but stay on target, and that target is central banks all over the world are keeping rates at almost 0% and flooding the world with liquidity into the monetary system, and that will inevitably cause asset price inflation or appreciation, depending on how you want to term it. And so it's important that although the path is not straight, almost certainly we are going to see commodities, real estate, and of course stock markets rally over the course of this year. That doesn't mean there aren't things going on, and I've been trying to talk about gold for the last 2 weeks, but I always seem to run out of time despite the fact that I speak very, very quickly. But gold is very interesting, and it has a very strong correlation to the US 10-year bond, particularly its yield. If we look at this gold chart, we can see that gold has traced out a long-term base at its 61.8 Fibonacci level at $1,680. This does imply that gold is going to move higher and test $2,000 an ounce again, that the low is in place for many, many months ahead. But its correlation to the US 10-year does make this conviction a little bit hard to maintain if you believe, as I do, that the higher bond yield story has yet to run its full course and yet make a return. Nevertheless, the charts are saying that gold has made a long-term base in prices and the worst is over, even if the path higher may not be a straight line. Let's talk about cryptos now, one of my favorite bugbears. And I want to talk about Dogecoin. And depending on which side of the fence you are with cryptos, they're either the future or they're an easy way to lose money, and fools are often parted from their money. Being over 40 years old, I'm of course in the latter category. Let's talk about Dogecoin though. It rose 100% on the 16th of April, and it fell 23% the next day, and then it rose 14% the day after that, and I believe that's been the price action until it settled around 33 cents this morning. I think part of the reason Dogecoin has been so popular is because it's cheap. Bitcoins cost over, well, around $60,000. But also, I think it's really important that people understand the difference between a tradable and an investable asset. So yes, you can go and trade Dogecoin and you could make money or you could lose a lot of money. But is it an investable asset that can be in one of your retirement or long-term savings portfolios? I think it and many other cryptos are in that latter category. It's not really an investable asset. Let's talk quickly about Bitcoin then, because this is the main coin in the crypto space. And interestingly here, if we look at the chart, we see that it's been in a rising wedge for the last 2 months, but actually it's broken out of the bottom of that wedge, and that's a bearish technical signal. So my take on Bitcoin, just looking over the next week or so, is that it's going to drift down to $42,000. Please don't hate me for saying that I'm a crypto skeptic. I'm just saying what the markets or what the charts are telling me. That's about all I have for this week, and I wish you a wonderful trading week ahead. Thanks for listening in.